Good evening, everyone, and thanks for joining. My name is Matt Kopchak. I'm the Vice President of Management with Worth Ross Management Company, and I'd like to welcome you all to our Master Speaker Series event for the month of August. For those of you that are joining us for the first time, welcome. We have designed this exclusive events to bring industry-leading experts to center stage for a unique and uninterrupted experience that like no other. You'll gain some valuable insight, learn about best practices, and have the opportunity to ask questions at the end. Our Master Speaker Series are carefully selected and are familiar with the specific needs, challenges, and opportunities that association boards and managers are faced with. As a reminder, just like previous sessions, before we get too far into this, again, a reminder that we are recording this session, and like always, we will make it available to you all afterwards through Nicole and our YouTube page and some other social channels. You'll have access to this webinar and all the others in this series. And with that, that leads us into today's Master Speaker Series, which is the ABCs of Community Association Banking. Our panelists for tonight are two regional account executives with CIT. We have Olivia Hurtado and Cynthia Burns. The overarching topic of discussion for tonight is the ins and outs of banking as it relates to payment processing, reserve fund management, and lending needs of the community association industry. The format for this evening is similar to all the previous events. So we will have the CIT team presenting for approximately 20 to 30 minutes, and then we will allow time for Q&A. If you have questions, please submit those to me, Matt Kopchak, through the chat box feature. We also have some questions that were submitted ahead of time, so thank you for those. I will be presenting those to the panelists if those questions were not answered through the course of the evening. So with that, I'm going to turn over the microphone, if you will, to Cynthia to start, and we'll get started.
All right. Good evening, everyone. Thank you for attending today as we take a deep dive into who we are as a bank and why Worth Ross has selected to partner with us. Again, like Matt said, our agenda for tonight is who we are, who CIT is, how community association banking got started, what makes us different from traditional banks, solutions we offer community associations and management companies, and then of course we'll have time for a little bit of Q&A. Okay, so the next slide. Go back to one, please.
Bear with me. Technical difficulties, you know.
Technology works great when it works, right?
Okay, let's try this again. Okay.
Okay. So a CIT, Commercial Investment Trust, is CIT, and they began in 1908 and have become a company of over $6 billion in assets. CIT is a Fortune 1000 company and is one of the top 50 banks in the United States. So Olivia and I have been with community association banking a combination of 31 years. And you probably guessed it right, we started when we were 10 years old. But with dozens of awards from Forbes and Bankrate, even to FinTech Breakthrough Awards, Olivia and I are really proud to be a part of the CIT team. Next.
So with that being said, a question that we get all the time is, how did it all begin? The history of community association bank. And so the idea was formed that a bank could help a property management company with their back office procedures and processes and increase their efficiencies, which could in turn increase their capacity for additional business without adding employees to support the growth. The idea continued to grow in the early 2000s in Phoenix, Arizona, and quickly it gained a national presence. We were able to automate the accounts receivable process and were able to provide multiple ways for homeowners to make their assessment payments. Being able to provide advanced technology integrations, we grew into a payment processing center for association funds. And what this simply means is that we were able to deposit those funds that came in through our lockbox technology directly into the association's bank account. As the association channel continued to grow, other products were brought online, including homeowner-driven and controlled recurring payments, either by an electronic check, a credit card payment, or account lending slide. Next slide, please.
You're muted, Cynthia.
Oh, sorry about that. CAB is moving into its third decade of operations, and we started as a family-owned regional bank, moved into a conservative insurance company, and now we feel we're in our natural position as a part of a real bank with a national presence. So CAB has always strived to be the best in association banking, and that includes the online experience, basic banking, investments, and finances. So you'll see here that we are currently at 5.3 billion in deposits, and that's across the country. That consists of over 33,000 community associations and 1,200 association management companies. So the acquisition in January of 2020 by CIT afforded community association banking the opportunity to continue to pursue the excellence in community association banking by being a part of a true financial institution. CIT's leadership knows how to leverage investments and technology in finance. This is a complement to community associations banking existing strengths and will pay off to CAB's clients, both management company and associations. And we'll talk about that throughout the presentation. In order for CAB to truly grow and to offer the platform that adapts to the changing technology that's for the HOA world and the HOA industry, CAB needed a national bank with a strong commitment to advancing the HOA banking experience. Next.
So what sets us apart? CIT versus a traditional bank. We get this question a lot too. Some of the key points that we'll go over right now and that we'll dive into further as well in the presentation. So let's start. A dedicated HOA team. That consists of a relationship manager. Think of them like they're the personal banker. This employee has developed a relationship with the Worth Ross management staff, all the way from Worth himself down to his accounting team. That means when there is a problem, we're not perfect, we're going to have a problem every now and then. This individual can call in directly to the relationship manager and get a live person. Nobody is in a queue. There is not, having to explain yourself to a call center. There is a direct relationship right there. In addition to the regional manager, the relationship manager is what Cynthia and I do. We are called RAISE, which stands for Regional Account Executive. I have the DFW in North Texas, and Cynthia has the whole state of Texas from DFW South. So we help each other out, and she works with the Worth Ross managers in San Antonio, Austin, and Houston, and we are able to help Worth Ross out that way. Another thing that we do is the master signature card process. Now, this is executed one time by the management company, which allows the Worth Ross management staff to open up accounts for associations through a simple email request. So there's no need to actually physically visit a branch, gather people to be on a signature card. It can all be done through email, which is a huge time saver and definitely helps with the efficiency in the back office. One of the big things are the fees. We do not have any banking fees other than an NSF fee. So those banking costs are absorbed by CIT. Traditional banks and brokerage houses can be fee heavy, especially when analysis is involved. And that simply means that they're looking at every single thing a customer does, deposits, calls, research, and they're attaching a dollar cost to that. And then you get charged a monthly fee, and we do not do that. So that is a huge advantage over a traditional bank. And lastly is the partner and the complete relationship that we have. We know the HOA business, as Cindy has said, we're starting our 3rd decade in this business. We've made it our priority to be a partner in this industry and not just a vendor. We have developed products and services that benefit the entire HOA when it comes to banking, including deposit accounts, reserve accounts, and lending, and our accounts payable and accounts receivable solutions. So we definitely wanted to provide services where it's a one-stop shop for our clients. So that is what sets us apart. Next slide, please.
Okay, so I believe the next few slides are really going to complement exactly what Olivia was mentioning, and again, why we are different from traditional banks. So this brings us to the payment processing portion. Homeowners have multiple ways to pay their assessments, from mailing in a check to our lockbox facility, to in person at the management company office or on site, our C Property Pay payment portal, and they can also utilize their bank's bill pay system. So with that, we're going to start with our lockbox facility. Lockbox is located in Phoenix, Arizona, and we do get the question from time to time, why Arizona? And our strategy was really to place our operations team and the lockbox facility in one location that is safe from natural disasters that could potentially delay the homeowner's payments into being processed and delivered to the lockbox facility. So the lockbox technology does allow us to process hundreds of thousands of payments monthly. And in the busy times between January and March, we're processing millions of payments each month. So assessment checks go directly to the bank. And really what makes a perfect payment, I kind of want to go through what this looks like. Management companies mail out statements and coupons yearly, and if a homeowner pays their assessments through Lockbox, if they submit the payment or coupon with their check, it's going to be posted error-free. So we are able to find a home for that check based on that statement or coupon. So if the statement or coupon is not presented when the check is sent in, we do use Lockbox technology partnered with the management company's accounting software technology to make sure that we can find a home for that payment. Our accuracy rate is 99.8, which is absolutely wonderful. But just remember, we are processing hundreds and thousands and millions of payments at some point. So if there is an error, again, we have our staff there, our operations, they're in the same facility in Phoenix. We can walk downstairs and really find out what the problems could be happening with these homeowner payments. So next is our online payment portal, which we call C Property Pay. And this gives the homeowners really 24 hours a day, 7 days a week, access to make payments online. So they can use the web or the mobile app. There are fees associated just with the convenience of a credit card or even the e-check on the mobile app. And that's due to just enhancing development of the technology for the app and the security features. So a huge benefit to utilizing our payment portal and our Lockbox facility is that any funds that are sent into the bank will be processed the same day and will also be, the association's bank accounts will receive those funds the next business day. So we've heard nightmares where if you use a third-party facilitator for payments or for Lockbox, the settlement date where the association does receive their funds could be anywhere from 2 days to 15 business days. So it really saves time. It's very convenient for your homeowners because there are multiple ways for them to pay that's convenient to them. Okay, next slide.
So to continue on where Cynthia left off, another service that we offer is called Remote Deposit Capture, or RDC for short. And simply what that means, it's the ability to deposit checks remotely via a desktop scanner. So at the Worth Ross Accounting Office, on site at some of the associations, there's the ability to have a scanner right there. So if someone drops off a check, they're able to scan it into the bank account directly. So it's a very quick and easy feature and convenient. Commercial online banking, which is just a platform that the Worth Ross management staff is able to use to look at all of the accounts that they manage. It's similar to your own personal online banking where you can schedule wire transactions, online bill payments, ACHs. They're able to do a lot of reporting through there, see images, that type of thing. It's a robust system for them to be able to manage all the accounts that they do manage. And then accounting software integrations. And in the simplest form and explanation, it simply means that our banking system is able to communicate with the Worth Ross accounting system of choice and able to transmit electronic data back and forth. So when, as Cynthia mentioned, a payment is going through Lockbox and is posted to the association account, that information can then be electronically transferred into the accounting system where they're able to post those payments. So next slide, please.
Okay, so we've talked about receiving assessments. So now let's talk about deposit solutions to keep your funds protected and also earn a great yield. So there is a common misconception that banks can protect associations' funds for $250,000 per account. And in reality, it's $250,000 in FDIC protection by tax ID number, by bank. So it doesn't matter if your association has one account with CIT or 20 accounts with CIT. It really depends on the total balance you have at CIT and really with any other bank. It has to be under $250,000 to be protected with FDIC insurance. Now, the tricky part is, let's just say you have a master association with several sub-accounts that all share the same tax ID number. That can be a bit tricky as well. So I think Olivia and I get calls quite often, and it's a manager, running to a board meeting saying, hey, I want to make sure all of our accounts are protected for $250,000. And that might not always be the case, but the good news is CIT and CAB, we have multiple solutions to make sure your associations are 100% protected. So what we do, we understand that it is a fiduciary duty of the board, right, to act in the best interest of the association and place reserve funds in a protected account. But really there is no outline or guidance that you as board members and even managers, when you're going to a meeting, there's no guide, right? There's no state statutes that dictate or limit what an association can or cannot do with reserves. And so what we really look towards is, there's a couple things. Number one is the governing documents. What do the governing documents say or stipulate, if they have any information in there, what the association can or cannot do with the reserves? So if your documents are written before 2000, they might be silent. Most of them probably are. If there is verbiage in your governing documents, it might say something like reserves can be used for capital expenditures only, which can cause a problem if operating deposits are low, especially maybe at the end of the year when the billing season hasn't begun, right? Step two would be to review your investment policy. If you do not have an investment policy in place, we really urge you to get one, to create one. Olivia and I, we can send a template that'll help get your association started. We do understand every association is different when it comes to reserves. So really what the association should do now, if they don't have an investment policy, is get one in place. Work with your CPA, work with your banker, work with your reserve study specialist, your CPA, your attorney, and just make sure that all the experts help you build this insurance or this investment policy that fits your association, okay? So what we like to do whenever we're looking at association funds and we get that call saying, hey, can you help us? What's your best rate? We have money to invest. We like to use our pyramid of priority. So our conversation will look something like, what is the liquidity needs of your community? Let's make sure, number one, your association funds are safe and secure and 100% protected. Two, let's look at liquidity. When does your association have major projects coming up in 6 months, a year, 5 years, 10 years, to see what type of products are available that you can utilize? One, again, to make sure it's safe, and two, to make sure it's available when you need. And we will use the reserve report to really help with those conversations. After that, it's yield. So again, when we get involved in a conversation, normally it's what's the best rate, or can you send me your rate sheet? And we're going to have 100 questions after that to really make sure we have that one-on-one consultation. Next slide, sorry.
Cynthia, Olivia, was she breaking up for you there?
Yes, towards the end, I did hear a little bit of breaking up.
You had mentioned about, I think you started breaking up when you had made a comment about, sharing a rate sheet. There's more to it than that. Would you mind repeating?
Oh yeah, sure. So usually when Olivia and I get involved in the conversation, it is the pyramid of priority is flipped around. So what happens is we get asked, can you send us the rate sheet? What's your best rate for the 1-year CD? And really it's a conversation, and we're going to have 100 questions behind that. What does your association need as far as protection? What's the liquidity needs of your community based on your reserve study or projections of projects you have in the next 30 days, 6 months, 5 years? We really want to know, because it is a one-on-one consultative type of conversation. Every association is different. So we want to make sure that your community, again, is safe. It's there, the money's there when needed. And then of course, rate is an absolute, we understand, right? The rate is very important, but it definitely should not be the first go-to, I guess. We should have a conversation and really find something that fits your association.
Thank you for repeating.
No problem. Next slide.
Okay, so one of the ways that we can protect funds over $250,000 through CIT is through CDRS and ICS. CDRS stands for the Certificate of Deposit Account Registry Service. ICS stands for Insured Cash Sweep Service. And these products are offered through the Promontory Financial Network. And that network consists of approved partner banks where we can place your funds. So you're probably wondering, how exactly does that work? So when your community association places a deposit using CDRS or ICS, it's divided into amounts under the standard FDIC insurance maximum of $250,000 at other network member banks. So your larger deposit is then eligible for FDIC insurance while continuing to work directly with CIT and receiving just one regular statement. When you set up these products for the first time, we do require a placement agreement where you can exclude certain banks. For example, let's say you have $250,000 at ABC Bank. You would then list ABC Bank as an exclusion, so we would not place any more funds there, keeping that bank account FDIC insured. And it's very well listed out where you can put multiple banks if you have multiple banks that you want to exclude funds from. So a little bit more about each one. CDRS, as it's referred to, is the CD accounts, and those are the timed investments. And we have options all the way from 4 weeks to 152 weeks. There's a ladder product that offers a couple, it's for multiple terms. And so we're able to place those funds and really come up with a solution that fits the association based on their liquidity needs. The minimum to open a CDRS is $10,000, and you can go all the way up to $50 million in the CDRS network. On the flip side is ICS. That stands again for Insured Cash Sweep Service. And this is going to be your liquid account. It's going to behave like a money market. It's going to be limited to 6 withdrawals per month. And there's a $50,000 minimum deposit, and you can go all the way up to 10 million in this account right now. And so how it works is it is linked to a CIT account on our bank side so that you can always see what exactly is in that ICS account. And there's 2 ways that you can transfer funds to and from ICS. You can have it customer controlled, which is where the accounting staff at Worth Ross will be able to make those transfers back and forth when needed. Or you can set up an automatic sweep with thresholds. And those thresholds are really set based on each association's needs. So it's really up to how you guys want to be able to access the money. I think on a general basis, the majority of our clients go with the customer controlled. They like the ability to control that transfer, but both are available. And some of the benefits for ICS and CDRS are it will eliminate the need to have to go all over town opening up a lot of different bank accounts at different banks to maintain FDIC coverage. You can do it all through CIT. Like I said, you were able to have one statement. You don't have to reconcile multiple bank statements, which increases the efficiency on the property management side. They're able just to consolidate and be done with one statement. They're all FDIC insured, which helps meet your fiduciary requirements. And the management company can work directly with us at CIT, either through me or the relationship manager or the CDRS department, to be able to set up these accounts. It's a very simple process once the initial account is opened. So for ICS and CDRS, lots of different options, and we're always available to go over those with you. Next slide, please.
All right, so one of the benefits that you may be taking advantage of today is our premium reserve suite of products and reserve desk. So early this year, when CIT took over, we saw a need for, let's say, a wealth management type of account or process products. So this began January of 2020, and it allows associations to have all of their funds reside in our bank as well. So it's additional coverage to the FDIC, to the ICS. These are our premium suite accounts, which consist of a sweep account that, again, can also be tied to your operating accounts. Money market accounts are available through this program, as well as CDs. So how the funds are protected is through a surety bond. So most of you might know what this is. Surety bonds have been around for a very long time, but the bank purchases the bond, which is insurance, from a third-party provider for the associations and the management company. The surety bond then issues the bond to Worth Ross, and the associations are listed in this bond. Whoever's taking advantage of the premium product suites will be listed on the bond. Again, it's great products to maximize your interest. Again, we'll do that consultative one-on-one to find out what product really suits the association best. And these premium suites, we also came up with the reserve desk, which is 4 or 5 employees. It's a group of employees that will monitor these accounts with us, the surety bond agreement, the surety bond insurance we have in place, and also your account. So if, for example, we open up a bond for Worth Ross for $5 million, but a lot more associations are wanting to use this and they start adding money to these accounts, our reserve desk is going to automatically obtain a new bond to make sure that the association's funds are adequately insured at all times. So they're constantly looking at these accounts. They're making sure insurance is there, so you can rest assured that your association's funds are always safe with our bank and with all the products we do offer. Next slide.
So HOA lending, this is another service that we provide, and it's my favorite. So what we can do for the associations is provide HOA loans, and it's a way to leverage reserves instead of depleting your cash. And it's a better financial picture for those potential buyers of the condo. So I will go over each product that we offer currently, and then some features and benefits, and of course, the most important part, how much does it cost to take out a loan? So first of all, we have the quick term loan, the traditional loan, and the car lock. And the car lock stands for Community Association Revolving Line of Credit. I would say in my territory, I would place 95% of my clients in the quick term loan. This quick term loan was developed. We have an advisory panel of property management companies nationwide that we consult with. They're our clients. They use all of our products, and they came to us and said, we need a quicker, better loan. So our lending department came up with this quick app, and as long as you're able to qualify under 8 general criteria, The application process is pretty fast and simple. It's an electronic application driven off of the number of units and the annual assessments, and that will tell you how much the association can qualify under the 3 fixed terms that we offer for the quick term loan, which is a 5-year, a 7-year, and a 10-year. We can fund all the way up to $3 million, and we can fully fund at closing. So there's no draw periods on this loan. It's a very fast process. Usually approvals are done within a couple days. Funding can usually be done in 30 days or less, depending on how quick the association moves. And it is a great product. A lot of people have taken advantage of it for those projects that they need around their communities. We also have the traditional loan, which if it's really suited for those who can't qualify for the maximum amount that they need for their project under the quick term loan, or perhaps it's for a project way over $3 million, as we can go up to 25 million on this loan. And the traditional loan is a full underwrite, which means we're going to gather a lot more documentation for this loan than we do the quick term. Our underwriters are going to do a full financial spread of the association's financial statements year to date in the last 3 years, depending on the loan amount. And they're going to really dissect the financial picture of the association. We have lots of options in that traditional loan, fixed and adjustable, anywhere from 5 years all the way up to 15. Those rates and fees tend to be a little bit more, and I'll get into that in just a second. And then we have the CARLOC, which again stands for Community Association Revolving Line of Credit. And this product was developed for emergencies. So for example, some of Cynthia's clients right now, she's in Houston, they're bracing for Hurricane Laura as we speak. A lot of her associations and property management companies that she consults with get this product for emergencies. If something happens and they're waiting for insurance to come in, or they need someone on their property now, they don't want to deplete reserves, they can pull from this and then pay it back as they see fit. It's also great for, on the East Coast, our clients there have snow removal in their budget, but a few years back there was a huge snowstorm and most of them depleted that and went into the red on that line item. So this product was able to be a backup, and then they were able to pay it off as they see fit. So we have those 3 lending products that really help our associations when they need it. And so how does this compare to a local bank? Loans that are made to the association as a corporation here at CIT, which means there are no individual homeowners or board members that have to sign a guarantee. I'm not sure if other traditional banks do that. I've heard that some do when they don't really understand our industry. And the board members that do sign the loan documents, they're signing on behalf of the association. Again, no personal guarantees. Rest assured, if the association takes out a loan, we are not going to come after individual homeowners, or we're not going to try and take back your clubhouse or any type of real property. That is not the collateral. The collateral on the loan is an assignment of assessment. Simply put, that means if the association were to foreclose, and rest assured, that's never happened in the 17 years that Cynthia and I have been here, but if the association were to foreclose, it just means that we as the bank have the right to have the assessments for the association sent to the bank. We take out our loan payment and then we release the rest of the funds back to the association. Again, I have to really emphasize this has never happened. We have not had to foreclose on an association, and even if we did, that's a very high conversation above Cynthia and I, and it's a very long process. We try and work with our clients. So rest assured, you're not going to have to sign a guarantee or anything like that. Let's get to the important part, fees. So for the quick term loan up to $3 million, you're only going to pay a $500 documentation fee. That's it. There's no origination fee. It's just a $500 flat fee. And I have yet to see a bank be able to beat that rate. I'm sorry, that fee at all. The traditional loan, there is an origination fee on that. Typically it's 0.5%. And then the documentation and legal fees do range anywhere from $500 to $5,000 depending on that loan size. And then the CARLOC, It does have a minimum line of $25,000 and a maximum line of $250,000. And that is also driven off of the unit number. There is a $1,000 per unit cap. So what that means is if you have a 30 unit property, the max amount you can get on the car lock is $30,000. If you have a 4 unit property, still the max is $250,000. There is a 1% origination fee and a $250 annual renewal fee, and that rate is based off of the Wall Street Journal prime plus 1% with a floor of 5. So those are the fees. Some of the benefits of doing a loan is the project gets to get done quickly. I don't know if any of you have gone through the process where you've had to have a lot of repairs done, or it's just a slow process when you have to wait for the special assessments to come in monthly. If you're able to get a loan, you can have access to the cash to get it all done quickly. It gets the contractors off the site a lot quicker. And there's no need to stretch a project over several years. Cynthia and I have a client in Chicago. It's about 5 years ago. An association decided to do a whole envelope. And it's a pretty big property. And they wanted to do it in phases. They were very dead set on doing it in phases. And so against our better judgment, we agreed to that. But they had such huge increase in cost in year 3. Not only that, some of the material that they had picked out for phase 1 was not available in phase 3. And it was kind of like a patchwork process. So that's a huge thing, is just to be able to get those repairs done. Also, it does increase the homeowner morale. When homeowners can see that their assessments are going to something that's improving their property, their pride in their homeownership goes up and their morale goes up, and it just makes for a better community environment. Also, a loan is actually a really good thing for the communities where not all of the homeowners are able to write a large special assessment check. You would be surprised, even in the affluent communities, there are several homeowners who just don't have the ability to write that check. So by taking part in a loan, they're able to stretch out their portion of that loan over the loan term. So it really helps those in your community who may not have access to those large sums of money. And the car lock is just a great backup for those emergencies. So I think that's all we have for the lending products. I think we're now up to Q&A.
Cynthia, or I'm sorry, Olivia, you, at least for me, you kind of broke up and paused for a minute whenever you were talking about the rate and the fee associated with the line of credit. It was right before you said the prime plus 1. So if you could repeat that.
Sure. So for the car lock, there is a 1% origination fee, and then a $200 annual renewal fee, and that rate is based off of the Wall Street Journal prime plus 1% with a floor of 5.
Okay. Thank you.
You're welcome.
All right. So we will move on to some questions. So a couple of these questions were submitted in advance, and then we'll go through the ones that are live after this. So you touched on banking fees. Does CIT offer investment advice or strategy when it comes to ICS, CDRS, premium reserves, suite options?
Yes, so I'll take that. We absolutely do. When it comes to associations reserves, you can definitely get on the phone. Olivia and I can be available either on a conference call, or when we're able to meet back in person, we can definitely join those board meetings and really look at where your association's funds are and be that, consultative guidance for that association. I mentioned the reserve desk. We're also able to put specific proposals together with the help of the reserve desk for each association to show really where their funds can be, again, secured, and then the maximum yield as well for those investments.
Okay. The next question we have is, why would an association choose a quick term loan over having a car lock available?
So I'll go ahead and take that. Because really, they might not be able to get the full amount that they need for their project. As I mentioned, there's a $1,000 cap per unit. So let's say, 100 units property needs a $400,000 loan. They're not going to be able to get that in the car lock. They'd only be able to get $100,000 for that. So, and I think that their rate is $500. There's no origination fee, and you're able to choose a fixed term. We don't have prepayment penalties. So even if you choose a 5-year term, but you want to pay it off in 2 or 3 years, you can definitely prepay with your own funds, and there's not going to be a prepayment penalty on that.
If an association is seeking a loan for a project, and it would require, a special assessment to the unit owners, does the bank require like a scope of work or competitive bids to make sure that what they're seeking is appropriate?
Yes, so we do require bids, signed final bids to be able to close. And that is just what you said, to make sure that the scope of work that you're requiring funds for, is in line with what you're requesting.
Okay, great.
And just to add to that, Matt, I just wanted to add to that question. We're also going to look at, for those larger projects, we're going to look at the reserve studies to see if the community takes out a 10-year loan. We want to know what other large projects are going to come up, right, in those 10 years. So we want to make sure that you're getting adequate funding, so you're not coming back to the bank 5 years down the road and saying, hey, we have a major project and we need more money. So we're going to, again, look at the big picture on those traditional larger loans and really make sure that it's a good fit for that association.
Does the proof of like the scope of work, the signed bid, apply to the shorter term loan as well?
It does not.
Okay.
Mm-hmm. So that's just the traditional, really large loans.
Okay. So we have a question here. This is related to the transition from Mutual of Omaha to CIT. Is CIT strictly online banking? Are there any issues with homeowners associations using an online bank versus a traditional brick and mortar?
So can you repeat that, Matt? I'm sorry.
Yeah. So this is a question related to the transition from Mutual of Omaha to CIT. Is CIT strictly an online bank? That's the first part of the question. And the second part is, are there any issues with homeowners associations using an online bank versus a traditional brick and mortar?
So CIT is not just an online, and I don't see any issue with an association using us versus a traditional brick and mortar. I know that sometimes a traditional brick and mortar, that's going to be your retail banks in your neighborhoods. They're not always, they don't really understand sometimes the industry. So they're not set up for that type of banking. Okay. I don't know if Cynthia has anything to add to that.
So I will say the primary branches are in California, New York. We do have branches across the country. There's a couple here in Houston, and it's definitely not just an online bank. Just like Olivia said, it's really, we specialize in community association banking. And if you do go the traditional bank with brick and mortar, I've just heard kind of horror stories when it comes to signature cards and trying to gain access to the association's funds. Or I actually had a client call me yesterday and said, I'm tired of working with our local banks here in Tomball. We really need to work with you guys, primarily because of the signature cards. They asked association board to have the 5 association members from 5 years ago that were on the board. They have to come to the bank to sign. Those homeowners probably don't live there. They're definitely not on the board anymore. So there's a struggle when it comes to your traditional brick and mortar banks. If you can find one that does association banking, great. I think there was at some point your brick and mortar banks that were trying to accommodate associations. And I think they're really getting away from that because they just don't understand how the association banking works.
Okay, perfect. Thank you. The next one, kind of a change here, but early on in the presentation, I think, Olivia, you had talked about investment policies. What type of things are you typically seeing in an investment policy, or type of recommendations are you making for associations when it comes to adopting an investment policy?
Matt, I'm sorry. I heard just investment policy in the beginning. I don't know what's going on.
Okay.
I'm sorry. Okay.
So I'll jump in.
Go ahead.
So the investment policy is really going to be your guide to what your association can do with reserve accounts. It should be very, it has to be very specific on what the goals are for the association. So if your goals are to always have 2 times your insurance deductible amount available, just in case anything were to happen, you want to write that in your policy, right? You can say something and be as specific as accounts can only be in an FDIC insured product. Maybe your association, it does not want to be with a surety bond or that type of insurance. It can be that specific. It can also be as specific as our association deposits can only be with a highly rated bank. So it's really what your association is comfortable with. The investment policy should definitely be something that someone with no banking or financial experience can sit as a treasurer and understand and implement what the board has actually put in place. Does that help answer that?
That's perfect. Thank you. Next up, how do you work with the Worth Ross management team to streamline processes when it comes to the suite of services that you offer?
So I'll go ahead and take that. I believe it's just the relationships that we've developed, between Worth Ross himself all the way down to his operations and accounting and management team. Myself speaking, I have made several relationships with all of the on-site managers, portfolio managers, the accounting staff, just knowing that I'm here, that we have people in place to help. You're not in a queue. You're not sent to some customer service line. We're here every step of the way. We truly are your partner in this and not just a vendor.
And just to add to that, it's more, and it's also technology, right? So we're definitely a relationship bank, but our integrations with Worth Ross, they've selected a great accounting package and they've selected a great bank. So with that, we're able to integrate and make sure there's efficiencies so that Worth Ross management agents and managers and accounting staff, they have those efficiencies in place so that when homeowners are having problems or issues, they really can focus on whatever that homeowner is calling them for, and not doing the mundane things that really technology can help with.
Perfect. So kind of along those same lines, earlier you had spoke about the lockbox and the accuracy that is involved with that. When there is an issue with the lockbox, what are some of the common pitfalls there, and how can we better service our communities that we manage to avoid those few errors?
So I'll start, and then if Cynthia wants to jump in and add to it, a correct coupon and statement sent in with the check. That's going to be the best error-free situation, as Cynthia explained. So what happens when we get just a check in an envelope? It's automatically taken out of the high-speed lockbox system where it's scanning and going electronically to the bank account. And that's where the human interaction comes in. Someone's going to have to physically look at that check if it doesn't match against the technology that talks between the bank and the accounting software. If we're not able to find a home for that, then we have to kick it out to exceptions. And that's where human interaction comes in. That's where just the room for error increases. So I would just say, if you're going to send in a check to Lockbox, make sure the coupon and statement is with it. Number 2, if you want to utilize the electronic payments, to make sure that you're set up through C Property Pay. You can do one-time payments or recurring. If you do recurring, you don't have to worry about it. You can just set it up and go. The main thing that you have those things set up, and if you're going to send in a paper check, to make sure that you have the coupon and statement, the most error-free, quick processing.
And just to add to that too, if for any reason you lose your coupons and your statements and you don't have any information or can't send it with your check, on the check, the homeowners can write their account number if they have it. Maybe that does warrant a call to the management company to get that account number on there. The more information you can provide on the check, if it's at the top of the check where it says who it's coming from and the address, we're going to look at, again, use technology to make sure we get that check into the proper account and the proper homeowner gets, gets the funds applied. So the more information you can put on just the check, if you don't have a coupon or statement, it's going to be placed in the proper place. Sometimes if we get a check that has no information in there, it just, again, human intervention, they have to get involved, and that could lead to errors, unfortunately.
Excellent. On the topic of the convenience of the app, this question is related to the fee with the C Property Pay app. Why is there a fee for using the app when paying with via e-check?
So what we have just been told is that it takes, I'm not a tech person. I don't know how to do apps and things like that. But from what we have been trained on is that, app technology is ever changing and expensive. So it is a way to recoup the costs that the bank puts into making sure that that app is up to date and running well.
And that's just for the mobile app, right?
Correct.
Got it. This looks like the last question that we received that hasn't been answered, and this is maybe just another point of clarification again, because it was mentioned. So should the FDIC insurance limit be a factor in the number of accounts an association has?
No, as Cynthia had said, it doesn't matter if an association has 1 account or 500 accounts with us. The combined funds per that tax ID number has to be $250,000 or less to be FDIC insured. So it's really, there is no account maximum. It is per tax ID number.
Okay, thank you for that. And then the last, I'm kind of grouping a couple questions together, and they're all related to reserve funding. So do you as banking partners with community associations provide any guidance, suggestions, recommendations on the health of the reserves or reserve planning?
So we always suggest having a reserve study done, making sure that it's current, making sure that updates are done. We do look at that. Like Cynthia said, when we're doing the traditional loan, we are going to take a look at that reserve study and see what projects are coming due during the life of the loan so that we can make sure that you're in a good financial position. The last thing we want to do is provide a loan to you and then you have to come back right after because you haven't been reserving correctly. So we do help with that and we do suggest it. But of course, that's not something that we can mandate as far as them following it, of course, but it is a suggestion that we do.
Okay, perfect. Well, that covers all of the questions that we received both in advance and during the presentation. I'm not sure if Cynthia or Olivia, if you have anything else to share. I
think we covered most of it. Like Cynthia said, we are available for consultations. If the board has a question, they can definitely reach out to us. We're available for meetings, emails, phone calls, whatever the case may be, we're here to help.
Well, thank you both for your time this evening. We will pass along your contact information to the attendees along with the recording of this presentation so everyone has your information and some additional contacts to go with that and the discussions we had. So if there's nothing else, I'm going to thank everyone for attending this event. We will see you all again next month and have a great evening.
Thank you, guys.